Hello, everybody. My name is Nicole and I'm a technical analyst and private investor. And some markets have been quite sort of wobbly, shall we say, this week. And what's amazing is just how totally interrelated, interconnected they all are. Not a single market lives in a vacuum. And one is like dominoes. Do you know what I mean? They all start going. So my first chart that I'm going to show you is a daily chart. It's a little bit complicated, but I trust that you'll be able to see what I want to talk about. But it's a daily chart of the German DAX index from the March 2020 low, where we saw a recovery, quite a sharp recovery, which then sort of petered out in the beginning of June and has subsequently formed a head and shoulders. It's a very shallow one. I've marked your left shoulder and your right shoulder, and this year's peak is the head. Okay, I've drawn in the neckline, and what was extraordinary, I was looking at this on Friday, the neckline stands at exactly 12,345. I thought, wow, that's a nice one to remember, nice and easy too. And sure enough, on Monday we came in and we traded below that neckline and settled clearly below it. We've had a follow through on Tuesday, a gap down into Wednesday's trading, and we've already given up 38% of the long, slow slog since March. The red lines on the chart are the measured targets from the head and shoulders pattern. That's taken from the highest point vertically down to the neckline and then across to the break. And it's 100% of the height or 161% of the height. That's a Fibonacci projection. You can also see that in all of this, we've broken clearly below that rising Ichimoku cloud. The moving averages are now clearly bearish. And so everything about this chart smacks of further losses to come. My second chart is something allegedly totally unrelated. And that is the weekly chart of crude oil prices in New York, NYMEX crude. And this is a weekly chart going back to the end of last year. And you can see that between January and March, we traded down. Then we had a complete catastrophe in April, where not only did the thing fall apart, but it also traded down to over $35 minus per barrel, negative $35. I mean, in my opinion, something that does that in a week is a market that is unsustainable and uninvestable, frankly, uninvestable. Anyway, just like the DAX, it picked up its socks and sort of marched steadily higher for a good 6 weeks and then started sort of struggling and has just not managed to get above the 50% retracement. This is an adjusted retracement level, by the way, because I've ignored that huge spike on the downside. And it's just been struggling. It's also struggling here. The green line is the 200-day moving average, and we're making zero progress, absolutely zero. And now we look as if we're going to drop a little bit further again this week, possibly closing below the sort of $36 level, something like that, the 200-day moving average, 36.95. And I mean, this is a million miles from OPEC Plus's belief that it might hover at closer to $50. My third and final chart is the Italian stock market, the MIB index, Milan in Bourse. And this is a quarterly chart going back to the late 1990s. And you can see that this is a truly sad little specimen. It too bounced from March's low, but it's only managed to get into the middle of this straitjacket that it's been in since 2009 and literally stumbling along the bottom of the range of its secular whatevers. I ask you, what is the point? This is a pointless chart. Don't bother with it at all. Hope to see you next week with some other nice charts for you to look at. Maybe something a little bit more positive.